It's time to do business again. Welcome to Business Incorporated. We have another 55 minutes to do business, and here's what we have prepared for you. In Kenya, the export of tea has dropped. And Nigeria has the attention of IMF. Some suggestions, we'll discuss those. BRICS summit is a big news now. Threats from President Trump. What will BRICS members do? You're welcome to the program. I'm Ini John Mekwa. We start from the global space as usual. Oil on Monday shrugged off the impact of OPEC Plus hiking output more than expected for August, as well as concerns about the potential impact of U.S. tariffs, with prices reversing early losses as a tight physical market lent support. The Organization of Petroleum Exporting Countries and their allies, that's OPEC Plus, they agreed on Saturday to raise production by 548,000 barrels per day in August, more than the 411,000 barrels hike that were made for earlier 3 months. And so we look at the numbers for this afternoon, and we see green is the color, $68.70 a barrel for Brent after it went up 0.6%. WTI went up less than that, I beg your pardon, 0.04%, and is at $67.04. And so one of these days, it will be good to take a look at the impact of the closing gap between Brent and WTI, which is not a usual scenario. Now, Moody's Ratings has cut its assessment of African Export-Import Bank debt, and also we see other geopolitical impact affecting the prices. And away from that to metals, gold prices slipped to a one-week low on Monday due to uptick in the U.S. dollar, with investors awaiting details of the trade ahead of U.S. President Donald Trump's tariff negotiation deadline. So we see that for this afternoon, spot gold is down 0.8% at $3,309.21. U.S. gold also down 0.7%. $3,318.70. Spot silver is down 1% at $36.53. Platinum is down more than 2% at $1,362.14, and palladium is down 1.5% at $1,118.05 per annum. Last week, data showed that U.S. job growth was unexpectedly solid in June. Also, concerns about tariff-driven inflation have led to expectations of slower Federal Reserve rate cuts. Minutes from Fed's last meeting due later on this week could shed more light on the U.S. Central Bank's rate cut path. Meanwhile, the U.S. is close to finalizing several trade agreements in the coming days and will notify countries of higher tariff rates by July 9, and Trump said, and the higher rates are scheduled to take effect from the very first day in the month of August. And we know there's a threat of additional 10% for companies who are sympathetic to BRICS or members of BRICS. So we'll see how President Trump will put all of that together from the 1st of August. Come back to Nigeria now, where the Central Bank of Nigeria has clarified recent speculations regarding charges related to the newly launched non-resident bank verification number platform, affirming that there's no hidden fees introduced, and that the BVN enrollment for Nigerians residing within the country remains entirely free of charge. Making the clarification, the bank's acting director of corporate communications, Mrs. Hakama Sidi Ali, explains that the fee referenced in the report applies solely to the recently launched non-resident BVN initiative, a service designed specifically for Nigerians living in the diaspora. According to her, the nominal charge of approximately $50 is not a fee for obtaining a BVN, but rather a recoverable processing cost for remote biometric and due diligence verification. The cost, she notes, covers secure identity authentication, data handling, and technology infrastructure required to support the overseas enrollment process. And looking wider now, passengers departing from Nigeria, Sierra Leone, and Benin paid some of the highest air tickets, taxes, and charges in Africa in 2024, placing West Africa at the top of the continent's air travel cost ranking. Sierra Leone ranked first for regional departures with charges of $294, second for international at the same rate. Gabon topped the international category with $297.70 and ranked second for regional at $260. Nigeria came third in both categories with passengers paying $180 each for international and regional departures. These findings were detailed in 2024 taxes and charges study reviewed by the African Airlines Association based on data collected across 54 African countries in September 2024. The report shows that West Africa recorded the highest average levies on the continent, $109.50 for international departures and $97 for regional. Odua Investment Company Limited has shared its determination to contribute to the diversification efforts of Nigeria's revenue. The group chairman, Otumba Bimbo Ashiru, was speaking on the sidelines of the groundbreaking ceremony of the redevelopment of Odua Court in Lagos, says the group is focused on value addition.
Let me tell you, one of our focus is agriculture that will lead into industrialization. We have a company called SWACO, Southwest Agri Company, which, just about a few weeks ago in Ekiti, we have about 4,000 hectares. We are growing maize, cassava, and we've signed joint venture about 10 billion with different companies. We are doing cocoa. We want to start exporting our finished goods, not our raw materials, because we want to create jobs in Nigeria. And that's the major, and Mr. President has said it, that we should stop exporting raw materials, because when you export raw materials, you are transferring our own labor, jobs outside. So the focus in Odua, because let me even tell you, it was agriculture that actually was the bane, was the foundation of Odua. Look at Cocoa House, the first 25-story in Africa. It was the fund from agriculture that it was used to build it in Obasanjo University, all the good roads infrastructure. So we are going back to that template. We are working on that. And our focus on agriculture, we have almost 40,000 hectares in the southwest. And don't forget that southwest is the economic hub of Nigeria. Odua is owned by the third largest economy in Africa. So you can see that we mean business, we are into real estate, we are into agriculture, we are even into IT, SWIFT. We just established another company called Southwest Technical Information Technology. So we are working on so many things. We have hospitality. Very soon, by early next year, we are going to be commissioning 154-room, refurbished Premier Hotel in Ibadan.
And as the African continent works on improving intra-trade through AfCFTA, participants and manufacturers are asking the Secretariat to improve the process of certification. The managing director of Sasoli Industries, who was a guest on Business Morning earlier today, says potentials are enormous, but this bureaucracy could be a hindrance.
Of course, we have the certificate also of which is called ETLS, in which the ECOWAS countries do not pay the import duty if they are buying within the ECOWAS countries. Yes, it is there, but the process of the export, it should be more smoother. Sometimes the ship reaches Ghana within 3 days, but the documents take nearly 2 weeks to reach the place, which is what we have to look into, The support which we need from the government for the export is that it should give the system, or it should make the system so easy that we can export. See, basically we are trying together to the government to gain the foreign exchange. So for that, we need the support for easy cross-border or documentation for us to encourage gain more effects, which I think we are lacking. We should have that support for exports. This is the target which we are focusing from this 2025 to export more.
All right, now let's put our attention on the latest article by the International Monetary Fund. That's Article 4. And a summary of it, they say that Nigeria has implemented major reforms over the last 2 years, which have improved microeconomic stability and enhanced resilience, according to the IMF. And the country successfully tapped the Eurobond market. We know they've already paid off the first servicing of that, and they've earned credit rating upgrade, pointing to improved confidence. Growth has been steady, but too low in per capita terms. And I guess that's one of the conversations we had on Friday, how to balance the macroeconomic wins with microeconomy, which seems to be missing at this time. So the IMF says gains have yet to benefit all Nigerians. Food insecurity and poverty have risen. Halfway through its term, the government is now focused on raising growth while adapting to the spillovers from the changing global environment. So now let's look at this. But another thing from this article is the praise that the Monetary Policy Authority has received, especially the central bank. The forex is one thing, and it was part of our conversation this morning. But now let's get the perspective of Dr. Josh Bamfo. Dr. Josh Bamfo is a partner and head transfer pricing and economic advisory services at Anderson, Nigeria. Dr. Bamfo, good morning or good afternoon. Welcome to the program. More praises for Nigeria, but it seems the praises is also at the same level with questions as to what's going on in the micro side. I'm sure you've seen this article. What are the outstanding points for you?
Thank you, Indy, for having me. I think first and foremost, we need to commend IMF for recognizing some areas where the government has made some progress. So as you rightly said, the feedback was balanced. So when you look at the areas where they believe that we've made progress, number one is the fact that there's been significant progress when it comes to macro stability. And what that means is that when this current administration took over, they implemented two major policies, and we are all aware of this, and we've discussed this over and over again. The first having to do with removal of fuel subsidy to ensure that there isn't too much fiscal squeeze, that can then free up funds for them to then invest in capital projects. And the second had to do with moving away from a fixed exchange rate regime, which pretty much meant the Central Bank of Nigeria was subsidizing the price of hard currencies to citizens of this country, and moved to a floating exchange rate regime where the market forces determine the price of forex. And through that process, they've created transparency. They've also ensured that bottlenecks that hindered supply of forex into the marketplace have been taken away. And therefore, we can see some sense of credibility that the forex market provides to investors in general. In recent times, we've seen a stabilization of foreign exchange rate between 1,500 to 1,600, naira to a dollar, and that stability helps with, businesses being able to plan. So you can argue that there's been some macroeconomic stability. To add to that, our external reserves at the Central Bank of Nigeria has increased. That means that they can continue to support the stability of the foreign exchange rate should there be some spike or excess demand for forex. So that is where the stability argument stems from, and that's pretty fair. But in doing that, they've also recognized some potential challenges. The first of it being the inflation still being relatively high. We all know that the economy ended last year with inflation rate of around 34.8% December 2024. Then because of the rebasing of the CPI, it dropped significantly come January to around 24.48. Today, as of May, I think it's around 22.97%. Even though there's been some gradual decline from the 24.48 in January to May, we still see this to be a bit significantly on the high side, because the target for CBN should be plus or minus 2% off 8%. So that is basically where we are now in terms of inflation still being a problem. But another thing that they cautioned the government about has to do with the budget itself. There have been some assumptions that were made in coming up with the budget that relates to the price of crude oil internationally, which was around, and they assumed it to be $75 per barrel. Today, we've seen it hovering around $68 per barrel. In terms of oil production, they had assumed 2 million barrels per day, but we are hovering around 1.75 million barrels per day. Those optimistic assumptions could lead to some significant spillovers in terms of not meeting their targets. And so they've warned that there's a potential of our budget deficit to GDP ratio rising from the projected 3.8 to as high as 4.7%. And that could trigger some debt sustainability concerns going forward. So this is another area that they caution the government about, and it's important that the government is willing to relook those assumptions and make the necessary changes. The other part has to do with the social net, poverty being high and how they can intervene and support those who've been impoverished due to the adverse consequences of some of the policies that were implemented 2 years ago. So those were some of the highlights of the recommendations or the issues identified by the AMF.
Yeah, so, and they advise the Nigerian government to review the 2025 budget. Now, we've been talking about this for a bit. You've talked about, of course, the oil prices, which is a major threat. The budget has a target of $75, but now we see oil prices about 66, 65 at its best. And now we have OPEC increasing outputs at even more than expected for the month of August. That means the price is likely to drop even further. So when they give the advice of reviewing the budget, does that mean there'll be another round of budget presentation and adjustments and all of that? Or how can this be approached?
So I think based on the response from the Minister of Finance, I think there was a clear recognition that, the assumptions were, a bit optimistic, especially the one that we don't have control over, which is the crude oil price. So clearly, I think there was some admission by the Minister of Finance that they will relook into that. The other aspect, which has to do with the crude oil production, the response I got was that we're going to work hard to increase production to the target that we set. The question is, are they going to be able to achieve that, move from, let's say, 1.7 million barrels per day to the 2 million barrels per day target? For me, that is where the challenge is, because I don't think there was a clear admission by the Minister of Finance that the 2 million barrels per day target that they set were too ambitious and it's not achievable. So I think there's going to be some review as to whether they're going to review down the output target. That's a bit questionable.
Yeah, well, I guess if it's not reviewed, we're going to leave the budget. We're going to leave the budget maybe not so impactful. Because I even wanted to ask, at this time, I think we have about 2 or 3 budgets running. So I wonder if we're already on the 2025 budget.
Yeah, so I think right now we are on the 2025 budget, and there's still room for further review. I mean, a budget is a projection, right? So now that some assumptions were made earlier on, and we believe those assumptions are not realistic, I think it's fair enough for them to do a proper review and make some adjustments. Apart from the oil price and production projections, there were other concerns. So clearly it's important that they relook this. Another question they raised was the fact that are they going to be able to actually get the gains from this subsidy removal? What they've argued is that if they're able to get the full gains of the subsidy removal, that is going to add about 2% of GDP to the budget itself, and therefore help reduce the budget deficit to GDP ratio. But the question is, are you going to be able to fully realize, the gains from the subsidy, fuel subsidy removal? So those are other questions that they actually raised. The other element of the budget has to do with recurrent expenditure versus capital expenditure. Capital expenditure are on capital projects that are supposed to spur or lead to growth. Recurrent expenditures do not really lead to growth. So what they've suggested is do some reallocation, cut down on some of your recurrent expenditures and move them to capital expenditures, make those investments happen within the course of the year so that we can get actual gains in terms of economic growth. So those are additional recommendations that has to do with the budget. And I mean, they were receptive in terms of the recommendations. Let's see what the Minister of Finance and his team are going to do about the recommendations.
Yeah, there's also the one about the social net, programs. Even though I had an extensive conversation on that on Friday, I would like to get your perspective on how you think that can be solved, because that seems to be one of the reasons we see the number of poverty, even though the macroeconomic numbers are looking good, the number of the poor is increasing and the microeconomic indices are not looking good.
Yeah, obviously, the first phase is to create a macroeconomic stability and move to implementing policies to generate economic growth. It's when the economy is growing at a much faster rate than population growth rate that you can have some people actually being moved out of the poverty line and above it. But that is not the case. Because we have inflation being elevated, still as high as almost 23%. Monetary policy is still tight. It's not expansionary in nature. All right. And if it's tight, that means that we've not reduced interest rate to make the cost of borrowing cheaper so that businesses can invest more and create job opportunities and therefore move some people out of the poverty line. So what the IMF recommended was the need for government to have some social safety net by making some cash advances to the very poor. But we all know that there's going to be data challenges and there's going to be challenges in its actual execution and whether it to get to the right people. So it's one thing making a recommendation to help the impoverished in society. The other question is, will it be executed or implemented effectively to achieve the desired result? Truly, we have some macroeconomic stability. Inflation is still elevated, but that has not trickled down to the very poor in society. And that is where there should be some level of refocus to ensure that those below the poverty line are not struggling as much.
And you talked about the gains of subsidy removal. So we've seen FAC increase. Obviously, that's as a result of that. But I wonder if we should expect any other benefits from subsidy removal.
I mean, the clear benefit of the subsidy removal is the fact that the government is not going to be under extreme pressure in terms of its fiscal position. I mean, the concerns we had prior to its removal was the fact that government was spending so much to subsidize, cost of fuel to the masses, but there were leakages in the process, and people weren't getting the full benefit of it. And that wasn't even sustainable in terms of the subsidy. So government had to take it off. Now, the potential benefit is now that we have some wiggle room in terms of fiscal space, how do we use those savings and reallocate those savings to the sectors of the economy that can actually drive economic growth and benefit the nation as a whole? But if there are also leakages in terms of the use of the subsidies that we've been able to save, then that is problematic. You've tried to solve a problem, but you weren't able to use the solution to create opportunities for the nation as a whole. So it's going to be a big question in terms of how the government can demonstrate that those savings are real and they've been reallocated to sectors that are more productive and beneficial to the economy as a whole.
All right, but what if, because we're in July now, we're talking to August, then the second half, I don't know how it's supposed to be for the government to change those parameters in the budget. What if they don't change it? What if we just go ahead like this? What are some of the consequences?
The biggest concern to the IMF in terms of the consequences, IMF is the lender of last resort. They don't like situations where governments are a little bit optimistic about their budget targets and become less prudent in their spendings and end up with huge budget deficits. And over time, those deficits add to your debt, and your debt situation becomes unsustainable. And if you cannot, it becomes unsustainable, you could have a situation whereby the global credit rating agencies can actually downgrade your credit rating for a sovereign country, and you might not even be able to access the international market if the need arises. And that could lead to some debt crisis, which a number of African countries face post-COVID period. And luckily, Nigeria didn't go through that. Neighboring countries like Ghana actually went through that, and Ghana had to go through a tough time to get the economy back on track. So I think it's important that we listen to IMF and take this precautionary tale and then implement a budget that has been revised to reflect the realities on the ground in terms of some of these key targets, so that we are close to our budget deficit to GDP ratio target of around 3.8%. Even if you get to 4%, that is reasonable. But at this rate, IMF is projecting a budget deficit to GDP ratio of 4.7%, which is significantly high. And I will hope that the government will take that into consideration and make a few adjustments here and there to bring it down to a more reasonable target.
All right. Thank you so much, Dr. Josh Bamfo, because obviously that 4.7 is a lot, and it will affect our credit rating at the end of the day. Dr. Josh Bamfo is partner and head transfer pricing and economic advisory services at Anderson, Nigeria. Thank you so much for your perspective.
Thank you, Ini, for having me. Bye-bye. All
right, let's take a break. When we come back, we'll head to the market here on Business Incorporated. Please stay with us. Welcome back. It's still Business Incorporated here on Channels Television. We head to the markets now. Well, I hear the NGX has made another rebound, new level.
Well, definitely, I think we're hanging on to that 121,000 level now, and so we're not going anywhere. Even if we expect,
we can go to 122.
Well, yes, upward. Upward from here, upward from there.
Yeah,
we're not going backward.
Exactly.
Definitely, you got me there. Now, so let's see, major markets in Africa were mostly positive at intraday. We saw Nigeria's NGX trading higher at intraday at 0.22%. JSE in South Africa, however, was trading down 0.04%. But elsewhere, we say Egypt is back up at intraday 0.38%. But meanwhile, Nairobi Securities Exchange closed Friday's session in green territory. It's been back-to-back surge for that index. It was up 0.65% to close on Friday. More news coming in. The Nairobi Securities Exchange, as the NSE, has added over 800 billion shillings, Kenyan shillings, in its investor wealth in 2025, with the index rising up 30.5%. And this is continuing a 20-month rally that began in late 2023. Companies in the manufacturing sector in that country, Samir Africa and Captura Tea, have dominated the market activity in recent days, drawing investor interest, very strong interest, amid a broader uptrend. But let's go back to what's happening at the NGX and see what is happening there. Are we going to be sustaining this new level that we are seeing now? Or are we going to see a pullback anytime soon? Now we are joined by Oluwatobi Adesonya, equity trader, Z-Crest Securities Limited. Good afternoon, Oluwatobi.
Good afternoon, Will. Thank you so much for having me.
Toby, the market has kicked off the new week. Positive notes. This is what we hope for all the time. ASI is back in 121,000 level. Rebounded. Now, is the new resistance here at 121,300, which we've been cited by technical analysts, and the support at 119K levels, is this here to stay?
So, like you said, we have seen the market, at the new resistance of 121 plus. So we can say we can say on the average. So that's like the new norm, because of course we have to back it up with reasons. So, we have, for example, we are starting the new half year, which is the H2 2025. So, it brings a sort of new air. So this is the period where investors and, portfolio managers, they would like to review what they've done so far in H1. And of course, if you look at H1 performance, at the beginning, it was not really too good, but towards Q2, so we could see the market's improved performance. So we can say, with we are seeing profits. Yeah, we are seeing good returns on the stocks. It was around May that the ASI started returning double digits, and as of last week Friday, the returns was 17.55%. So this is things that investors will look at, planning into the H2 proper. So we can say it is a new level for us in the market. Yeah, and we have been seeing a lot of portfolio rebalancing. So we've been seeing market participation, both even from foreign investors and domestic investors. So we can say that level is here to stay to a large extent.
Okay, if it's here to stay, is this going to go up, continue to go up from there, or are we seeing any pullback to, say, levels not hoped for?
Okay, so regarding pullback, the only thing that might want to bring the pullback factor, could be, let's say, profit-taking activities, especially from people who had, gained tangible returns on their investment. But in as much as that might happen, we definitely see people want to position for Q2 results, because this is July, so we would start seeing Q2 results any moment from now. So for as long as there might be pullback in terms of profit-taking activities, we will always be seeing people that are invested, that are interested in, coming on board with their investment.
Okay, speaking of profit taking, can you tell us about the activities going on at the NGX as we speak? What are some of the stocks investors are buying or fading at the moment?
So for now, we are seeing a lot of activities in the banking space. I could say, following the forbearance saga that we saw, last month. So, that even tells us how strong the sector is, because if it were to be maybe a different sector, to rebound might be difficult, but in less than a week or so. So, we have been seeing people react positively, especially in the banking sector. We saw the likes of, let's say, Zenith. For a while, Zenith has been around 40 levels, 45, 48. But even after the forbearance and they came out with that disclosure, so we have been seeing the stock rally. Not only Zenith, other banks, especially the tier 1 banks. So we have been seeing a lot of buying interest in them. And recently we saw GTCO also listing on the London Stock Exchange. They came out to announce. So we have been seeing a lot of positive sentiments in the banking space. And one thing that the forbearance really addressed that's kind of scare investors is regarding stopping dividend payments, and to a large extent banks has come to address. And that's one thing that we should also look out for, because some banks would want to prove to investors that they are strong and they can still pay dividend. So we might be seeing interim dividend announcements from most of these banks. So that's why one can say to a large extent, the level that we are now will
definitely
become the new norm, right? So just to reiterate, we are seeing a lot of interest in the banking space, and as well consumer goods sector, because you can see for H1 the sector really performed very well, coming from them being in the loss position all through, let's say, last year, and we have seen impressive Q1 results. So we are also expecting their Q2 results to be very, very good. So we can see banking, consumer goods. So we are seeing a lot of activities in that space, and as well we have been seeing activities in the healthcare space as well. The likes of Fitsin, although we can say that for Fitsin it has relaxed for a while. The likes of Meyer, Nimet. So we can even say generally that investors are now being intentional about their decisions. That is looking out for companies, what they do, and their plan, for the medium to long term. So we have seen activities across banking, consumer goods, healthcare.
Okay, so it's definitely sustained bullish sentiments. There's a good earnings result will definitely keep investors at their toes and definitely keep the market up. So how should we expect the market to trade this week?
So for this week, we would most likely see mixed performance. For last week, the markets closed in the red for about 2 out of the 5 sessions, and the remaining 3 sessions it was positive. So this week, it will most likely be mixed. The performance will most likely be mixed. So we would have maybe some days where it will close up, and some days it might close in red due to profit-taking activities. But generally, I'm expecting the market to be mixed this week.
Thank you so much, Oluwatobi Adesanya, equity trader at ZCrest Securities Limited, for joining us this afternoon.
Thank you so much for having me.
So let's look at the other stocks in the Middle East. Gulf stocks rose on Monday after President Trump signaled progress on trade deals and extended tariff reprieves for several nations. Now we see Dubai index up 0.67% on gains in the Dubai Islamic Bank and a 1.3% increase in top lender Emirates NBD. Now Abu Dhabi was up. We see that index up 0.19%. This is also, gains from, the news, Trump, stalling that tariff date. We'll wait to see August the 1st. But still within the region, Saudi Arabia up 0.23%, and this was up by gains in Al Rajhi Bank. It was up 0.6%, and a 3% jump in Aqua Power Company that drove that Tadawul index up 0.23%. We see Qatari index also up 0.46%, with petrochemical maker Industries Qatar trading 0.4% higher. Now let's look at the U.S., where stock futures slipped in pre-market trade today after President Donald Trump clarified that new tariffs will take effect on August the 1st, not July the 9th, as previously expected. Dow futures dipped 0.06%, while we saw the S&P 500 futures and the NASDAQ futures dropping 0.26 and 0.37% each. Now, the move followed confusion over tariff timing, with officials confirming that rates and deals are still being finalized. Adding pressure, Trump also threatened an extra 10% tariff on nations aligning with BRICs policies, increasing investor caution despite recent Wall Street highs. Now we're checking on Asia markets. How did they perform today? How they closed? It was mixed on Monday after President Trump confirmed new reciprocal tariffs will now take effect August the 1st for countries without trade deals. Now Japan's Nikkei fell 0.56%. Mostly on that news, trading below 40,000. That's 39,587. South Korea's we see that up 0.17%. But in Japan, we saw that news coming in that new real wages fell 2.9% in May, the steepest drop in nearly 2 years, and despite consistent nominal wage growth since late 2021. Meanwhile, Hong Kong's Hang Seng lost 0.12%, if you see that on the screen. And on the flip side, China's Shanghai index rose marginally, 0.02%. And we see the Nifty 50 in India closing flat, but in positive territory at the close of business today. Still a strong start for Monday. Let's see how the week pans out, especially with all the tariff news coming in. Trump is about his business as usual. And this is what we also always say. The taco trade thing works. Trump always chickens out. Why is he extending this date now from July the 9th to August the 1st? It's like he never, follows through. He never sees anything he says through. He makes a threat and then chickens out at the end of it all.
Will, please do not dare President Trump.
America
is first.
America is first.
Yes.
Well, right now, we don't know if America is first with the decision he's making.
Yeah, but I mean, if we want to talk about it, we saw jobs last month. It was higher than expected. The month before, it was still better than expected. We saw inflation looking better. So President Trump might seem like he doesn't please the world, but he's giving America the good numbers. So, I mean...
But he's giving it good numbers, but those numbers apparently are not doing so well, because we see the U.S. Fed not bowing down to pressure to cut rates, because it says it would have cut rates if not for Trump tariffs.
Yeah, well, you can't win it all. The more important thing is today, more jobs are being created. So perhaps the tariffs are working for America.
If it's really working for America, we did see
the numbers.
We did see, some people talking about, the health cuts, in the healthcare, some of those policies coming in there. So not everyone is benefiting from all of this.
You pay
Peter, rob Peter to pay Paul, or pay Peter to rob Paul.
Yes, something like that. I don't know, but I mean, it's the way of the world. And so now let's head to Europe and see what the market is looking like with Lars. Lars, good afternoon. It's a new week. It's August 1 now for the reciprocal. I wonder how your market is reacting to it too.
Yes, markets here. Hi, Ini. Good to be with you, by the way. I just had to laugh. Markets here are starting the week with some gains. But reason I had to laugh a little bit is because we're talking about Donald Trump and those taco trades with Donald Trump always chickening out, because we have exactly that situation here on the European markets too, of course, because last week, remember, we had a very weak trading week, of course. And that was mostly because everybody was afraid of these tariffs to hit, and now all of a sudden, and for no particular reason, we are seeing Trump extending that deadline for another 3 weeks for a trade deal to be signed, potentially between the EU and the US. So it is exactly what you've just been discussing here. It's one of those taco situations here. I guess we've long learned not to take these things seriously with regards to long-term planning. There is no strategy here, but we're talking good news. We're taking good news, of course, as they come, and looking at the markets right now, they do appreciate this extension that we got. We see the DAX up by about 1%. We see Paris up in the green as well. It's just London that is virtually unchanged at the time.
So last week, I think there was a high heat wave in Europe, and now European Union is talking about how to tackle it, climate change and all. What's the latest on this?
Well, Ini, let's go straight to the numbers here. The European Commission laid out another ambitious climate goal. They want to see carbon emissions reduced by 90% by the year 2040. Now, while that is the first time we're hearing this particular number, it falls right into what we've already known. The EU had previously laid out guidance for carbon emissions to drop 55% by 2030 and then by 100% by 2050. Now, that, of course, would mean that they would go away entirely with the bloc essentially becoming carbon neutral. So a reminder that the EU is serious and that the Green Deal is an important centerpiece of EU policy. But reactions have been mixed, Ini, as you can imagine. French President Emmanuel Macron, Italy's Prime Minister Giorgia Meloni, and Poland's Donald Tusk, they've all said right away that they're opposing this latest push. They are saying, and rightly so, that it could be costly, of course, for businesses and be problematic for some of the already weak economies within Europe. Anyway, the EU plans to introduce these latest goals as their minimum goal for the upcoming COP30 World Climate Conference, which is going to be held in Brazil this November. The goal there to also bring China on board, to date, of course, one of the biggest polluters and carbon emitters.
So, I mean, what are businesses saying or doing with this? I mean, you say it's going to be problematic for businesses.
Yeah, well, Ini, as you can imagine, mixed picture here. A delegation of German business leaders was actually in Brussels to discuss climate policy and what it means for their companies. Among those companies, steel giant ThyssenKrupp, there was a Lufthansa, there was energy provider E.ON. So now for all these companies, climate policy has a huge impact on their bottom line, of course. Now the EU says that they understand that the fight against climate change cannot be done in a way that threatens the global competitiveness of German or, say, EU companies. That's especially clear as it would not simply be unpopular, but it would actually be self-defeating if, let's say, tight emission rules hamper a German airline. Then that will benefit a Chinese operator instead, who is not bound by the same rules. And this would, of course, be no help for the climate at all. So the EU keeps looking into subsidies, into payments to companies who incur higher costs due to their efforts towards fighting climate change. And so all this is on the table, Ini. And it should be clear by now, too, that combating climate change is not just a cost factor. It also brings opportunities for businesses, and that is something economies should embrace and actually try to benefit from.
Yeah, they should. Everyone should. Lars, thank you so much for that.
Thank you, Ini.
All right, now let's come to Africa, where South Africa's President Cyril Ramaphosa says that in the face of challenging geopolitical climate and growing trade uncertainty, there's an urgent need to strengthen trade and investment ties among BRICS nations. Ramaphosa is attending the BRICS summit, which is being held under the theme Strengthening Global South Cooperation for More Inclusive and Sustainable Governance. The two-day summit is expected to focus on a range of duties, including poverty reduction, climate finance, trade, and the impact of artificial intelligence. Nigeria's President Bola Tinubu is attending as a visitor.
Undertaken to review the strategy for BRICS Economic Partnership 2030. In view of the current geopolitical challenges and trade uncertainties, the strengthening of trade and investment ties between BRICS countries is therefore absolutely essential. The fourth industrial revolution has brought about a new era in the social and economic life of all countries and all people. It has demanded that countries develop new policies and strategies to enable an inclusive, whole-of-society approach. Global institutions and inclusive participation are needed now more than ever. And it is in this regard that the reports that we've just received from the Business Council, from the Women's Business Council, as well as the Civil Society Council, are very important.
Still on BRICS, the 2025 summit, which kicked off on Sunday in Rio de Janeiro, Brazil. Leaders and heads of emerging economic powers are participating to discuss prospects for international cooperation and formulate a vision that reflects the aspirations of a multipolar world. 20 countries have joined this year's BRICS summit, including permanent members and partners within the group. The summit is scheduled to last 2 days, featuring a packed program, including plenary sessions, bilateral and multilateral meetings. Discussions during the BRICS 2025 summit will focus on strengthening South-South cooperation amid ongoing efforts to consolidate BRICS' position on the international stage. Key topics include global economic governance, innovation and technology, sustainable change, and international peace and security issues, alongside specialized official sessions. This is the 17th edition of the BRICS Summit, being held under special circumstances. The ground faces a host of challenges, both internally and externally, testing its ability to achieve its ambitions. Well, added to that is now the threat from President Trump of an extra 10% tariff to BRICS and sympathizers. Let's go to Ghana now, where the country has recorded its highest ever tourism revenue. That happened in 2024. They generated $4.8 billion from over 1.2 million international visitors. That's a 12% increase from what they had in 2023. The surge was driven by strong arrivals from the US, from Nigeria, and the UK, according to Ghana Tourism Authority, the report from that. But the GTA CEO, Marilyn Mame, says that they credited the growth to the targeted marketing, digital innovation, private sector partnerships, and improved training and regulation standards. Major events like Pana Fest and others also contributed largely to this. Then we go to Kenya, where tea export declined by almost 5 million kilos in April from 37.9 million recorded in March due to wars in some of Kenya's main export markets. In April, the country exported 39.91 million kilos against a production of 51.78 million kilos by the growers across the country. According to the Tea Board of Kenya, in April, tea was exported to 54 countries, with Pakistan buying over 17 million kilos, and this is lower compared to the 21.6 million kilos that it bought in April last year. Still in Kenya, cross-border trade recorded a sluggish start this year, 2025, with latest data showing a decline in both export receipts and import spending across multiple global markets. The performance reflects a cautious global trade environment shaped by shifting demand, volatile commodity prices, and emerging regional realignments. And that, of course, is a global happening at this time. All right, now let's see what's happening in the world of crypto and see if we have the numbers. We know that, well, there's a bit of relaxation now that President Trump has said that the reciprocal tariff will start on August 1 instead of July 1. But let's see what else is happening. The headlines from crypto: Russia has launched a national crypto mining registry. Russia has introduced, I think I'll just have to move out to the board. Let's look at those headlines. So we see Russia launching a national crypto mining registry. And they introduced this aiming to combat illegal mining and stabilize regional energy systems. It's being led by the Deputy Energy Minister, and the initiative targets major cryptocurrencies like Bitcoin, Ethereum, requiring operators to register their activities. That's in Russia. Another headline from the crypto space is Meta Planet's bold move to amplify Japan's crypto ambitions with massive BTC holdings in a move that reverberates across the global financial landscape. Japan's publicly traded firm Metaplanet has once again underscored its profound commitment to Bitcoin, dramatically increasing its holdings. I wonder if that has affected prices today. I guess we'll see. And then cryptocurrency surge amidst U.S. trade deal speculations. I knew the tariff would affect this market. So if Bitcoin, Doge, and XRP saw sharp price gains after U.S. Treasury Secretary Scott Bessent signaled potential trade deals ahead of the crucial July 11 tariff deadline. Let's talk to Rume Ofi now and see what he thinks. And Rume was really busy this weekend. Hi, Rume. Welcome to the program.
Hi, Ini. Thank you for having me.
Yeah, so we see August 1 is the new tariff, and we see the market happy about that. Is your pocket happy about this?
Everyone is happy when the market is green.
I know,
how
right?
Sustainable it is the challenge right now.
So you had an event over the weekend. Tell us about that.
All right. So on Saturday, we had the Decentralized Nigerian conference that happened actually at the Civic Center, Victoria Island. I had all of the stakeholders come to one room to chart the course forward for how the industry, blockchain, crypto, Web3 industry can be better. I was so proud. This is one of the biggest that have happened in my life. As a co-convener, as a brain, this is my brainchild. I've also see others from different parts of the north coming to Lagos in order for us to have this engagement to see how far we can champion our cause forward. Nobody's going to do this for us. As stakeholders, like I always say, we keep advocating till all of our worries have been addressed by government. This is very, very serious. Countries like Kenya now are actually making their ecosystem very friendly, and investors will most likely go there and not look towards Nigeria. And this is what we're saying. We need to make things work.
So, Rume, you called it decentralized Nigeria. What are the high points of, the take home of decentralized Nigeria?
The take home was we can make a whole lot of things work with the industry, the knowledge for the industry. Web3, the blockchain, the cryptocurrency industry goes beyond just all of what people think. It's a new sphere that everybody can carve a niche for themselves, depending on the area they want to get themselves involved in.
You talk about making all of this attractive, having our structure. Now you're doing this. Do you connect to the government, to the regulators? So, how do we make this, something that is realistic beyond the talks?
All right. So at the end of this event, and even before the end of this event, we're already in talks with captains of industry. We've written to government officials, written to the SEC, we've written to other agents of government on the need to apply this. It's a new technology. It plays a role in different facets of life, in engineering, in law. Imagine in our legal system where a particular case can be pending for as long as possible, but implementing blockchain, using the Web3 industry to leverage on all of that, it makes it really, really fast to make things work. In engineering, supply chain, all of this. But we need collaborations from government. All of this is going to work when government collaborates with all of us that are in this industry. It's something that we're calling on, and we need to be deliberate about all of it. This is not just about talking. I myself on this platform has been talking for some years now, but we are putting industry leaders together with this event, which we're going to be doing. This is the maiden edition. Next year is going to be another, and bring all of the components, government, captain of industry, stakeholders together to be able to make practical use of all of this so that it doesn't end up being just talking, but walking the talk.
Yeah, walking the talk, that's the major thing. Thank you so much, Rume, and congratulations.
Thank you very much, Ini. Always a pleasure.
All right, so that's it on the program. Thank you so much. It's day one. We have 4 more days to go of doing business. 55 minutes going around the world of business. I'm Ini John Mekwa. Enjoy the rest of your day. I'll see you tomorrow. God's grace. Bye-bye.